Today you're going to hear about a company who is a retail leader in Indonesia. Its share price has ran up from 80 cents to $1. So what exactly do they sell? Chocolates. You hear that right? Chocolates. Curious to find out who exactly they are? Continue watching on. Hi guys, welcome back. This company that we'll be discussing today is Delfi. I'll be sharing with you 3 key segments. The first is a troubled history that Delfi has actually been through. Previously, it was known as Petra Foods. Second, I'll be sharing with you how exactly they've turned their business around. And last but not least, I'll touch on the strong investment merits they present, because right now I've invested quite a big amount into them already. I'd like to share with you some reasons for you to consider. Let's start by understanding its troubled history. Take note again, right now, Delfi is priced at 11 times price earnings ratio with a dividend yield of more than 4%. Its share price has ran up from 80 cents to $1, which is cheap, good, and trending upwards, correct? But do you know, this boy was once a market darling, doing more than 1,200%, which is a 12-bagger from 2009 to 2013. So what happened previously was Delfi, which was known as Petra Foods back then, they actually bought more cocoa manufacturing and aggressively expanded in 2007. That fueled rapid revenue growth, as you can see in the charts, which I've dug up for you from its 2011 financial year report. This cocoa manufacturing segment was actually divested in 2012 for a fee of 950 million. They went through some legal tussles because of this. It's settled already. But more importantly, Delfi actually returned some of this capital back to shareholders and simplified its business from then on to focus more on chocolate manufacturing and distribution. In my opinion, maybe it was a good decision on hindsight, because as you can see in the periods from 2015 to 2020, Indonesia's economy was struggling. And it actually hit rock bottom in 2015. By the way, Indonesia's economy seems to be on an upswing right now, which could be a tailwind for its business, and I'll cover it towards the end of this whole discussion, so stay tuned right to the very end. But I've actually dug up something to explain to you a bit further, and this can actually be found in the 2017 report. It's mentioned that after revenues crossed 500 million in 2015, the business was actually impacted by negative sales, especially in Indonesia. This is because Indonesia's economy contracted, like what I've shared with you just now, and rupiah actually declined 12.5% year on year against USD. And this seriously impacted consumer sentiment. Not just that, Delfi had to fend off competition from global chocolate brands, and their decision was to actually rationalize their product range, which also means cost cutting and shrinking of product range, so that they can focus on the higher margin product lines. Naturally, this means that in the short term, there's pain, and this can be seen in the group revenue summary table in the top right hand corner. So you know, Mr. Market, when revenue drops, profitability drop, share price, it will definitely decline, correct? This is shown in the share price chart in 2017 below, and if you'd like to see what has transpired in the next few years after 2017, you would see more bloodshed. A total decline of 74% from its peak. So again, good company does not equate to good investment experience. We need to differentiate the two, but let me show you now why they could have turned things around already, at least in my opinion. Let's start with dividends. For 2022, Delfi will be paying 4.3 cents, which is made out of 3.58 cents normal dividend and 0.72 special dividend. And when a company actually raises dividends, there is actually optimism on their business that they are trying to convey to shareholders. Delfi has also transited from an asset-heavy business with loans, as you can see in the red arrow over there, to a much leaner business. The total assets have shrunk, but the debt has been cleared. And right now, to be specific, it's now a free cash flow business with net cash. To me, this is very important because right now we're in a high interest environment. You want businesses that are not on a lot of borrowing and can produce you free cash, because that means that they are the ones that can expand their business, correct? Especially in a high interest environment. And a further point to add, if we drill down to the net cash, it's actually declined a little bit, correct? From 2021 to 2022. Previously it was 76.2 million, now to 58.1 million net cash. This is because they are anticipating extra sales in 2023. That's why they've loaded up on inventory. I've checked on the balance sheet, it's there. And this is something also mentioned by UOB Kay Hian's analyst report. This leads me to believe that the process of revitalizing the business has been completed, quite possibly even last year already, and is right now bearing fruits. Let me next show you quarter-on-quarter breakdown to appreciate the turnaround story. What we can see from fourth quarter is new record performance in net income. And upcoming next is first quarter 2023. I believe this will also be a new record performance, because if we see in terms of their history of sales, usually the first half of the year is where the strongest sales comes in. This could be due to holidays and festive buying, but to me at least in the foreseeable future, profitability and revenue is trending upwards. Where is the revenue trending upwards specific? I've also done the homework, so as always, smash the like button, smash the subscribe, especially if you like content like this that helps you in investment ideas. Let me show you the main business segments. Delfi's main business is traditionally in Indonesia. It's been that for the last 50 years. And I'll be comparing 2019, which is pre-COVID, and right now. You realize that 2019, Indonesia's sales was 309 million, Malaysia's sales was 80 million, and this was a 70% ratio and 18% ratio. Fast forward to right now, 2022, you would realize that Indonesia's revenue actually climbed, correct, to 317 million, but Malaysia is the one that is outperforming massively, growing to $110 million. Management has shared specifically that agency brands in its Malaysian operations are the one that is picking up the most. And if you want to understand a bit deeper, let me show you this summary table. Agency brands include Pringles, Kellogg's, and Tauke New. Its house brands are Delfi, Van Hoyten, Silver Queen, Top, and Selamat. Delfi is the only one that I'm familiar with, and if you haven't eaten their own house brands, it's because, again, mainly they sell in Indonesia. That leads to a third segment for today, which is a strong investment modes that Delfi presents right now. Some people say that Delfi in Indonesia is like Hershey's to Americans. In this report, you've seen that for 20 years, global chocolate brands have been trying to crack Indonesia's market because of their big population, only to find out that it's a hard nut to crack. They couldn't grow any market share simply because if this Deloitte survey is accurate, most consumers there still prefer local brands. Specifically, Delfi's suite of brands combine more than 50% of Indonesia's chocolate sales, and to me, their business mode still remains intact. Pretty good, correct? And I have a sweetener to add to it. Take a look at this price earnings chart. What do you see in that blue line over there? It's been trending upwards, correct? The grey line is market cap. The blue line is the price earnings ratio. And when I see expansion, I'm curious as to what's going on. If this is indeed a multi-year phase of price earnings expansion, I think this means Mr. Market is optimistic, which is important because we want to avoid value traps. This is something I've taught in JOSH TAN Academy. In this investment course, I teach on how to actually identify multi-bagger stocks. And if you'd like to become a better investor, let me invite you there. And I've prepared this course specifically to give you a very good foundation as to how to become a better investor. Thank you again for watching. Let me know in the comment sections whether you agree with my analysis or not. And as always, I have something to suggest for you. The reason I have capital right now is because I've sold my house, and previously I've actually bought big into REITs. If you haven't seen that discussion, check that out via this link over here, and I'll see you there too. Invest safely as always, take care, and goodbye.